following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our quotes. This is by Maya Angelou. I believe the most important single thing beyond discipline and creativity is to what? Is daring to dare. Market wise, let's take a look at it out here. We have the Dow Industrials up 22, Nasdaq is flat, S&Ps are up $1.50, gold contract down $1.80, trading at $1,199 an ounce. Silver down 1 penny at $16.26 an ounce. Platinum flat at $1,161 an ounce. Copper up 6.5 pennies at $2.77 a pound. Light sweet crude up 29 cents, trading at $56.67 a barrel. Bonds, you have the 10-year up 9 ticks, 123.23, 129.23 rather. 30-year up 1 at 164.04. And King Dollar's down 940 ticks, trading out at 97.58. This is the third day in a row that King Dollar's coming down with volume, and we get some real juice. King Dollar's going to be barreling into this swing point. We'll see what happens with the swing point. Bottom line, though, King Dollar looks to me like this is a long-term change of trend. Why? We had made the high 2-to-1 ABC structure on the way up, come off the high with volume, went and tested a high again with lighter volume, come off that high with volume. Your probability is much higher now that King Dollar is basically done. Euro is up 119 ticks, trading at 108.04. You get the yen down 30 at 118.84. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, first, I'm going to go over the world instead of the S&P, which we normally do. I'm going to go over to the world of SD. SD went public today, folks, okay? And you got to check this out. This is pretty intense. I mean, this is when the froth is hitting the market in an incredible way. So, SD, well, first off, SD is up $13.63 right now. What SD does is this, okay? They offer handmade, vintage items, art and supplies, clothing, housewares, paper goods, all of the above, okay? Bottom line. Now, check this out. This is pretty intense. So, it went public this morning. It went public at $16, okay? So, it certainly didn't, if you got shares prior to the market, you got them at $16. The stock is trading at $29, okay? The stock went to $35, but check this out. When you talk about trading as to what an equity is worth, okay, this is about as intense as you can get. And we haven't seen this for quite a while. And specifically what I mean is this, is that where the stock is trading right now, it is trading 15 times, not earnings, it's trading 15 times revenue. It has a market cap right now of $4.5 billion. And at the top of the market today at 35, you're talking about a market cap of almost $6 billion. Well, they only take in 70, well, let's say they plan on taking it right now. I'm being generous, actually, because right now they're taking in $63 million a quarter, okay, which gets you to $240 million. I'm upping it because they're claiming that they're going to take in $102 million in the last quarter of this year. So I'm using the $300 million they're taking in per year. Bottom line is that you can, it's about as intense as you can get, meaning in the aspect of what the valuations are. And I suspect that as soon as this thing went out, the door. Anyone in their right mind that could sell that stock, they're selling right into this, because that is a frenzy. There's no doubt about it. When you can get 15 to 20 times revenue, never mind, that's a beautiful thing. And so just picture something. If you have a business out there, you want a business, what that specifically means, if you take in $1 million, right? Never mind the expenses, you're taking in $1 million. That's all we're talking about. You take in $1 million, someone's going to pay you $15 million for the revenue. Pretty intense. Now let's go over to the SPY. We take a look at the SPY. We take a look at the SPY. SPY out here. Bottom line, folks, is that this market is still holding in here. SPY out here is trading at a price point of 210.63. The high out there yesterday was 211.04. It hasn't hit the high. Yesterday we had volume of 99 million. Today you're up there with 46 million. Bottom line is, though, guess what? You don't have any sellers either. There's no buyers to get it over the high, but there's no sellers to basically bring it down either. We look at the 3 Qs. 3 Qs are basically, well, are weaker than the SPY or the small caps. The 3 Qs have 12 million shares out here today. Sideways move. You're down 11 cents, but it's really a sideways move. No juice whatsoever. 12 million shares. Yesterday, we did 21 million. IWM, we take a look at the IWM. IWM's at a higher high. That IWM, now in the IWM broke higher yesterday. The IWM, well, it's not at a higher high, I guess. The high yesterday was 127.13. We're at 126.54. Gold contract. What do we have with gold? Gold, folks, I'm going to start calling the everybody bunny, just like the bond market. Why? Because guess what? It's subtle, and it refuses to back down. What we got out here today, and this is, I love it when it's like this. Okay, so picture this. Gold right now, it traded up to 12.08. It's at 11.98, so it couldn't hold price. But guess what it has, folks? It has real juice behind the move. You got 149,000 contracts out here. You're going into 106,000, okay? That's building big cause, okay? Gold's going to be going after the swing point up here of that 1224.50. We're going to take a look at the TLT, the bond market. We use the TLT. That's the 20-year bond fund. And what we have inside of that, this bond fund, this is pretty intense out here, is that you're trading at 130.36. You got down to 129.41. Couldn't even get to the swing point. So rejected, lower price. This thing is building cause to get up and over the 132 to go after the high, which was established in January of 138. Now, King Dollar, and here is where you put the whole baby together, folks. King Dollar. What do we have with King Dollar? This is what you have. King Dollar has not only come off the high, it just continues lower with expansion of volume. Thus far, we've done 68,000 contracts in King Dollar. You know, we did yesterday we did, let's see. Yesterday we did 76,000 contracts. The prior day we did 65,000 contracts. We had tested the high with 57,000. The high that we would, you know, on the 13th, okay, which is Monday, we were testing the downdraft of the 18th. Couldn't handle it. That test was 57,000 contracts versus 101,000 contracts. You come off the high again, you come off it with volume. So, what do we have at King Dollar? Well, we're coming into Friday. Friday, of course, in the currency market and the gold market is a big deal because they can push it anywhere they want. I suspect, well, okay, so here, I'll pull 2 different things up for you so you can see how this thing works. The swing point that we're dealing with, the first swing point in the dollar index is 96.56. You're at 97.59 right now. What I expect you're going to see is that you're going to get down to that, not break it tomorrow. You'll have a couple days over the weekend. Then next week, you're going to see this thing make a run for it. You know, how we come into that area is going to be crucial. If we come into that area tomorrow and it goes right after it, I suspect you won't break it. Well, you may break it, but you're not going to have enough force. And if we did have enough force, that would really be saying the dollar is going to pull back in an extraordinary way. The reason being is that these last 3 days, there's a lot of selling in the dollar, folks, okay? This is a lot of contract volume as you're coming down into lower price, big time. Our phone number is 877-927-6648. Let's get over and we take a look at the XLE. inside the XLE right now, what you have is that the XLE had a little juice out here yesterday. It is pushing into a swing point. The way the XLE is trading right now, we are at a price point of 82.68. The swing point that you're going into is right where the gap was, right where we gapped down. We pull this thing back. You had gapped down on the 28th of November, and you know, the bottom line is that you're at 17 million versus the 42 million. And right into that supply line. You know, it's hanging at the supply line, but it looks like no way, Jose. It doesn't look like it's going to be able to handle it. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow is up 27. NASDAQ is up 1. S&Ps are up $1.50. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now up 22. You get the NASDAQ up 1.50, and the S&Ps are up $1. As we do each and every Thursday at 20 past the first hour, going on my man, Mr. Andy Heck. And don't forget, folks, Andy has an outstanding program right here at TFNN every Tuesday, Thursday, 5 to 6 Eastern Standard Time. You get that program, folks. In fact, you get all the programming at TFNN right on your cell phone. TFNN.mobi. Just put that in your browser. If you want to get Tiger TV, go to TFNN.com. On the right-hand side, you'll see a little box. It says mobile devices. Hit that. You get Tiger TV. We do live programming every trading day, 8 o'clock in the morning to 6 in the evening. And if, folks, if you haven't heard, man, Mr. John Logan kick things off, you know, you want to know what's going on in the marketplace right around the world, check it out. 8 o'clock in the morning. It's a great program. Andy, he's also got a great newsletter. It's the Technomento Commodity Report. Andy puts technicals together with the fundamentals. You can test drive that newsletter right now. The way you do it, go to TFNN, go to newsletters, trading newsletters. You're going to see our man, Mr. Andy Heck, be out there growling and prowling with him. Hey, what's going on, man?
Hey, how are you?
I'm going great.
Good, good.
The dollar's going to hell in a handbag, man.
Oh, come on. Still above 96. Still above 96. You know what? I expect big volatility in this dollar. These Greeks, man, it's looking now. A lot of people are saying now that they're going to leave the euro, which I'm not so sure of, but it's going to certainly cause volatility for the euro. I don't see the euro running away on the upside anytime too fast, too quickly. You know what's cool,
folks? I love kidding with Andy, of course, okay? But I think it is going down. But you know what I think is amazing? What every big market turn, not market turn, but in the dollar in general, what you can pick up, not just in trading, but the hypocrisy basically in the world, is that for years, do you remember, every single corporate guy, every single politician would turn around and say that, oh, the dollar's going to hell in a handbag. It's terrible. It's terrible. We have to do something about it, right?
Yep.
And now the dollar goes up, and now you have all these corporate guys, including Jack Walsh. The reason I'm bringing this up, Jack Walsh this morning on CNBC was saying the dollar is creating destruction. I'm saying to myself, oh, this is amazing. Okay?
Oh, that's true. It's unbelievable.
No,
I know.
Listen, it gets better. It gets better. So what also happened today, too, folks, is this. You have the Republicans and the Democrats yapping about the deficit, right? Well, guess what? And they're yapping about Social Security and everything, right? Well, they just passed, okay, that inside the medical bill today, paying the medical establishments an extra $150 billion with a B, okay? And guess what? You know what the vote was? 98-4. It's like, oh. So my point is, folks, they're all in this together. Give me, deep pockets, feed the pockets. The hypocrisy is like sick, man.
Well, it's a function of the electoral system in this country where campaign contributions basically buy votes.
Oh, totally, man. It's so simple, too. It's simple. It's easy pickings, man. You're talking about, what, 535 representatives? I mean, it's a joke. It's like a joke, man. Unreal.
Yeah, government. We could talk politics all day long. Let's talk commodities.
Listen, that has to do with making money on the dollar crashing, man.
Oh no, I know. Well, dollar crash, the dollar. All right. So let me just say something about the dollar. The dollar to me is like everything else this year. It's a trading market.
Yeah, which is
Look
great.
at crude oil, which is great. It's great. This is a trader's paradise, man. Things are moving up and down down and up.
Yep.
Look at oil. Oil now, all you hear is the bullish side. $60, $65 oil. Let me tell you something, Tom. I'm starting scale up selling here in oil. Oil is being it's got a very bullish camp, some very bullish factors, got some very bearish factors here. This is a year where when you have profits in trades, you take them.
Quickly, yeah.
Quickly. So oil, hey, term structure started changing a week and a half ago or something.
Yeah.
Now we're up. We might run up to $60, $62, but it's coming back down to 50. The dollar might go down to 96 or 95. Then we're going to take another look on the upside. Gold is in a range. You know, things are in ranges. So when they get to the top or go a little bit higher than the top of the range, they go to the bottom, they look sick and ugly. It's time to do the converse in these markets and to remember to take profits and not get married to the trades. And that's what I think the hallmark of 2015 is in all our markets.
Yeah, which is dynamite.
Which is great.
You know, I know you're the technical and fundamental king, okay? And
king I don't know about.
well, listen, man, no, you know, it's amazing. And this came out, not that it came out of nowhere, folks, okay? But you know that the Saudis can turn on the valve in about 2 seconds. But, man, they turned on the valve in an incredible way. That number came out this morning. And so that number that they turned on, folks, so check it. Was it in 3 weeks that they turned on a valve that was half the Balkan Shield?
Yep. Something like that.
That's unbelievable. I mean,
it's amazing.
That is amazing. You know what's amazing about that?
And what happened? And what happened to the price?
Nothing.
It went up.
Yeah, it went up. No, it went up. I know.
Okay.
But you know what's so cool about this? And this is what's so cool, too, folks. If you remember peak oil, what the conspiracy was in peak oil is that all the peak oil people were saying that, no, the Saudis can't turn the valve anymore because they don't have the oil that they claim. It's like that just destroyed that thing like beyond belief, man.
They have oil. I mean, and oil's interesting. You know, oil is really, but two directions. Listen, I still think 50 is a nice pivot point for oil here. Are we going to get to 60 here? Maybe. The thing that's the most bullish about oil here is this open interest, which is up at, let's see, 1.78 million contracts. There's a lot of shorts in the oil market. So this is the time where they're covering. Let me show you another market that looks a little bit like this so we can put it into a little perspective. Let's look at the sugar market. The sugar market went down end of March, 11.91 cents per pound, really low.
Yeah.
Right? What has it done since end of March, right, end of the quarter? Since then, now we're at 13.43. But look at what open interest did. Short covering rally. That's what we're seeing. We're seeing long-term positions get burned in these markets. And we're going to see it in oil too. I reckon that, I'll go back to the oil chart.
Okay.
I reckon in a few weeks what we'll see is this open interest number start to come down, because what we'll see is that, you know, people take their lumps.
Yeah. You
stay in a market too long this year, you're going to get burned. That's my opinion.
And they're fast. No, listen. You know what? There's another. It sounds like a fundamentalist out there today. I guess 2 days ago was the first time that there was as much electricity generated using something other than oil, and that tipping point. They were figuring that tipping point was going to happen, but that tipping point came. You know.
But it was natural gas, right?
Yeah, it was natural gas. Right.
Right. And let's look at another insane market, natural gas. So the big injection comes today. 63 BCF goes into inventories. And what does natural gas do? It goes up.
Yeah.
It goes up. And you know what? There's so much natural gas.
Was that a lot injection? Was that a big injection?
I mean, it's, you know, look, it's the start of the season. 63 BCF is the biggest one today. Right, but it's not, you know, I don't know what expectations were. I didn't take a look at them.
Okay.
You know, this is the season where we're switching from withdrawals to injections. I think last week we had 15 BCF. It kind of starts slowly. 63, decent number. But look at what this thing's doing. You'd think it would be going down today.
No, it looks like it's going to go to $3, man.
I agree, 100%.
Can you stay with me?
Sure.
Awesome, man. You stay right there, folks. Andy Heck, Tom O'Brien will be coming right back. 877-927-6648. Give us a call, folks. Join the conversation. Come.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow up 7, NASDAQ and S&P's flat. We're talking with our man, Mr. Andy Hecht, and we are talking commodities. So
we were talking natural gas.
Yes.
Yeah. And you know, it's just an interesting move, and it's kind of a microcosm of what I'm seeing in all the markets this year. Whenever they get kind of a little bit too oversold, they're bouncing back. Whenever they get a little too hyped up, they're going down, and it's back and forth. And you know, it's like, it's really nice to catch a big move in a market and get in, you know, at one price, and then ride it for a long time. And,
yeah,
right, and get out. But you know, there's a lot to be said for being able to trade a range back and forth 5, 10 times. You actually wind up making more money than you do riding a nice trend.
There's no doubt. Ranges, depending on how wide the range is, folks. That's, you know, you get it doesn't have to be hugely wide, but you get a nice wide range. That's a good scene, right?
Absolutely, and I think we're seeing that in copper here. We're seeing it. We are seeing a decent, you know, range in gold. We're seeing nice ranges in silver. So I just, everything seems to me like it's caught in these ranges, and I'm not sure that it's popping right now, through supports or through resistances.
Yeah, no, there's no doubt. It's not popping until it's popping, right? Yeah, I agree.
Not popping.
No.
Not popping at all.
There's no doubt. There's no doubt.
Yeah. So we'll see what happens. I'm just going through all of my notes for the show today. I mean, we're still seeing, the interesting thing to me is we're seeing divergences. Lots of divergences. We're seeing them in the meat markets. We're seeing them in the precious metals sector. You know, and these divergences over time, and I'm talking about divergences not in terms of like the last 6 months or so. I'm talking about divergences in terms of the last 40 years. You know, the divergence between silver and gold prices is big over the last from over the last 40 years. Divergence between platinum and gold prices is pretty big. The divergence between beef and pork prices, pretty big. So we're seeing these divergences, and I do think that over time they are going to correct themselves. So this could be, this could be setting up some really nice long-term investment positions.
Yeah. Don't you think, though, I don't know about the rest of them, but the gold and silver deal, I remember when I first started the gold report, many of what happens, folks, is you have gold bulls and then you have silver bulls. The silver bulls are 10 times or maybe 8,000 times more bullish than the gold bulls. It just happens that way.
Right.
And their beef all the time was they would bring up the aspect when I'd be at these conferences speaking that silver's going to basically perform much better than gold because of the fact of the ratio, but they were bringing the ratio back like in Roman times. And I was saying, well, hold it, man. That's Roman times.
Right. I don't look at it in terms of Roman.
I know you don't. I know you don't.
I mean, Roman times 2.5 to 1.
Is that what it was? I knew it was something crazy.
Well, by the way, the first Egyptian pharaoh, Menes, he is the man who's responsible for the gold-silver ratio. He declared sometime, I don't know, 3000 BC or something.
Yeah.
He said 2.5 parts silver equal 1 part gold.
Really?
Right? So
okay,
that's kind of the
cool.
starting point.
Okay.
Right.
Okay.
It's kind of the starting point.
Yeah.
But in modern days, we've been down to like 16 to 1 and 79 and 80.
Okay.
We've been up to 99 to 1. I think in 91 when these things were really depressed.
Yeah.
And now we're at, 74 to 1 or something like that. And the average, in my career, and I've been doing this since 81.
Yes.
In my career, it always comes back to the 55 to 1 level. So where, could we go higher?
Okay.
Yes.
And where are we at right now? We're at
73 to 1.
So that's what you're also saying, that silver, well, either gold's got to go up or silver has to come down. That's
Well, yeah, or gold's got to come down and silver's got to stay the same. Silver is cheap relative to gold. So really, to me, the best trade out there today is long silver, short gold, or long platinum, short gold, which I like even better because platinum is just, silver, gold, they're both perception metals. Platinum, man, 250 tons of production each year. Gold, 2,800 tons of production each year. Platinum cleans poison from the air.
Right.
Platinum has huge industrial applications. Platinum is too cheap. Or gold is too expensive here. So the trade I like, long platinum, short gold, takes care of both. Gold can go up. If platinum goes up more, that's a winner.
There's no doubt.
these divergences are important to me. And you know, nominal price is one thing, Tom. You look at a price. What does a price mean? We talk about this a lot in oil.
Sure.
What does $56 mean? Doesn't mean a hell of a lot. What you got, it's the compilation of term structure, of processing spreads, of,
right,
you know, all different kinds of things. I mean, in gold, what does a $1,200 price mean? In terms of constant dollars, today's dollars. But it means something when you compare it to something else. And that's where I'm seeing the divergences, and that's why I'm kind of, you know, leery of gold here.
No,
I think gold's
listen,
expensive relative to these other things.
I guess, yeah, relative to those other things. To me, it's not expensive relative to basically buying shirts or pants or food or anything else, though. You know,
Well, they say that 1 ounce of gold should equal the price of a good man's suit.
Yeah,
that's another saying over time. I mean, there's a lot of these sayings, you know.
Well, not just a saying. I look at it. So to get an ounce of gold out of the ground, you're normally talking, you know, you get about 15, 20 tons of dirt. So it's like, okay,
right,
20 tons of dirt. You get 20 tons of dirt. You take 20 tons of dirt. You basically get it in the bucket. You merge it. You get concentrate coming out the other side. You know, it's a lot of work. You know, when I look at that, I'm saying to myself, you know what, man? Okay, that's cheap. You know, it's not cheap.
But you know, let me just comment on that, because you're right. It's a function of production cost.
Right.
And it's expensive to produce an ounce of gold. I have a very good friend that I teach with at the University of Colorado Denver Business School.
Yes.
He's a mineral geologist, and he has a totally different take on this whole thing. He says that production cost adjusts to market price all the time. So, in other words, when gold was 300,
that makes sense, right?
Right. When he doesn't believe in peak oil or peak anything. He says, you know, at a price, we'll find it. That's what us geologists do. We find it at the price. So when gold was $300, $400 for the longest period of time, you had companies like Barrick and other companies. They were heap leaching these open pit things. They were producing gold at $197. The gold adjusted to the lower price.
No,
now,
listen, I love the way that guy thinks. I think in life that's right. I mean, you know, that you
absolutely.
Yeah, right.
Absolutely. And when things get real, when production cost gets really expensive, then the beauty of technology steps in. Innovation steps in.
It does. No, there's no doubt.
Right. But, you know, in a short term, you know, over the next year or 2 years, hey, production cost makes a lot of difference. It absolutely does. Right. Things don't. So we have to look at it there. But when you project out long term, very hard, because markets are so efficient. That's why I like commodities. You know, for me, stocks and bonds and currencies, there's a lot of things that go into them. You know, you have to deal with managements and politicians and all kinds. Commodities are simple. You got supply and you got demand.
Right.
They're raw materials. You know, there's demographics. There's a lot of things that go into them. But the bottom line is, when they drop below production cost for the next couple of years, that's going to affect price.
Yeah.
I love to buy commodities under current production cost.
No,
I mean,
listen,
I love that scenario.
I told you my first trade was basically buying orange juice. I saw $3,500 go down the tubes in maybe about 45 seconds.
Well, but you did pick for your first commodities trade the most illiquid market that trades.
Did I ever tell you about that trade? Did I ever tell you about that trade?
You did.
I think I did. Yeah.
You should tell the listeners about it, because it's a great.
Folks,
it's really fun.
I think most of you know it, but it's a sick trade. So it was 1981, and I was trading bankrupt bonds, making a fortune. And I should have stayed. Well, I did stay in the bankrupt bond business until '94. So one of my guys turned around and says, "Hey, you got to get in this, you know, futures business." And so of course I was so used to every transaction making money, because I was the market and the bankrupt bond part of it. I said, "Okay, so how does this work?" He brings me into a broker, right? And at that point, the actual ticker was coming out, Andy. Okay, it had metal chairs downtown Boston, right? So I says, okay, so how does this work? He says, okay, we need $3,500. So I give him $3,500 in cash, right? So I give him $3,500 in cash. I sit down, fill out the paperwork. Takes all 10 minutes or something, right? Give him the cash. I sit down. He walks back. He walks back, folks. He says to me, okay, we need another $3,500. I said, what do you mean another $3,500? He says, orange just went the wrong way. You lost $2,800 out of the $35. He says, give me my $700. I'm out of here. That was it.
Right. Good point. But orange juice, like, I just want to show the folks with a chart in the den. This orange juice, we talk about things that have open interests of 1 million contracts. Orange juice has an open interest of about 16,000 contracts, and it has daily volume. Hey, today was a busy day. 2,000 contracts traded. That's liquidity is everything. Everything. Gold. What did gold trade today, Tom? I mean, probably 100,000 contracts.
Yeah, that's right where we're at. Right.
So you gotta, liquidity is key in these things.
Oh, no doubt. Okay, man. Well, listen, we appreciate all the knowledge, the education. We look forward to the show at 5 o'clock.
Pleasure. Have a great one.
Okay, man. Thanks so much. You stay right there, folks. We're going to be coming right back. Our phone number is 877-927-6648. Come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. You get American Express up $1.15. We have Disney up $1.12. Oxy's down 15. Big Blue's down 91. You got Walmart off 58. And you're going to be getting some entertainment tonight by way of Sony. This just literally came across the tape. If you remember, about 3 months ago, WikiLeaks had released a huge amount of documents from Sony Pictures. Well, bottom line is that just literally a minute ago, 200,000 documents were just released. Actually, no, 200,000 internal documents were just released. And so the newscasters, I'm sure, will get their hands on those. We're going to be reading about how deviant many things are inside that entertainment business. Let's go take a look at the XLF. So inside the XLF, what we had out here today, you had Bank of America come out with numbers. Bank of America is trading up 18 cents. Citigroup came out yesterday. Citigroup is trading up 86 cents. And if we take a look at the XLF in general, XLF is trading flat at 24.46. And what you have there is that it's probably Berkshire Hathaway that's still, yeah, it is. This is where Berkshire Hathaway itself basically is pushing the XLF, keeping the XLF down. Berkshire is down 54 cents. That's trading at 142 off its high of 152. What's going on, Berkshire is the largest weighting structure inside the XLF. And what you have, of course, is that some of the largest holdings there. You got Coca-Cola for Berkshire. That's down slightly, 45 to 40, no big deal. American Express is down. Bottom line is that there are holdings that are down. Now, if we go take a look at where the SPY is, the SPY coming into this close, really going to be a flat market coming into the close. What you are going to have, though, the SPY right now is trading at a price point. Whoop, where she is. There she is. She's at 210.28, and that level. Let me put this over here for a second for you. Whoa, there she is at 210.28. The high that they couldn't handle is 211.04. Let's go to Gene in Clearwater. Hey, Gene, what's going on?
Hi, Tom. I can't hear you on the radio right now. I'm in Clearwater. It's I think TAN. You're not on the radio right now, are you?
No, it comes on at 4 to 5. I'm on.
Okay.
Yes. So you want to look?
You can be heard in other areas, though.
Right. You can get me right on your cell phone.
Yeah, that's what I'm doing apparently.
Oh, that's a beautiful thing. TFNN.mobi. Oh,
okay.
hold it. No, I should be on right now. You're saying I'm not on? That my producer's telling me I'm supposed to be?
You come on at 4 o'clock here, I believe.
No, 3 to 4. Is it 3 to 4?
No, 4 to 5.
I should know. No, it's 4 to 5. It's 4 to 5.
Yeah.
It's 4 to 5, yeah.
Okay, well, anyway, I guess I can live stream you off the internet too, right?
Absolutely.
I mean, from 3 to 4.
You can watch all of Tiger TV right on your cell phone, and you can get the TV and the audio and the video. And it comes in great. It comes in great. You just go to TFNN.com, and you're going to see there's a little box on the right-hand side that says mobile. Hit that mobile, and you'll see the charts, you'll see the audio and the video. If you just want audio, it's tfnn.mobi.
Okay.
Okay.
Great. Now, my question was, this is pretty fundamental, but I never did learn this. I'm looking at GE stock, and it says dividend and yield, and then it says 0.92, and then in parentheses, 3.70%. What does that mean?
That means that if you bought General Electric right now, you would get a yield per year. I'm showing 3.37%. So it's basically, if it stayed at the same price, that is yielding 3.37% in their dividend.
So that's an equation. They come up with that based on the price and the dividend? Or
that's correct.
How do they come up with that?
That's correct. So watch how this goes. So because the dividend normally stays pretty much the same, or it can go up a little, most of the time GE is not going to put it down, okay? They try not to, right? So if you buy GE at a lower price, that means your yield goes up. If you buy GE at a higher price, that means that your yield goes down. So that means, picture it just like you have money in the bank, except what the difference is that it does fluctuate, and just because, like if you bought GE today, let's say GE is $27.28. Well, if GE, went down $1, let's see, if it went down $1, it wouldn't matter that yield at 3.3% because you'd still lose money on your principal.
Right.
Okay. Now that's on a short-term basis. Okay, but that's important to understand. Just because they're paying a dividend doesn't mean that you can't lose money.
Right, but if it's on the day you purchase it, is the dividend yield, those figures stay the same based on the day you purchase it, or
that would stay the same as long as the dividend stays the same or goes up. That's correct, because the dividend is a percentage of when I'm giving you that 3.37% today, that is calculated on the stock trading at $27.31. Let's picture tomorrow. So tomorrow, if that stock went up to $29, which it traded, 3 days ago, that 3.37 would probably be 3 that you gave me. That's what's probably going on. You see what I'm saying? Then, let's say if it went down, and it went down to $25, that 3.37% would go up to like 4%.
Okay.
Okay.
Yes. Thank you for.
Okay, Gene. Have a great one. Have a safe one. Let's go to Marie in Pennsylvania. Hey, Marie, what's going on?
Hey, not much. I wanted to ask you about the last 2 days in NRF.
NRF. Let's take a look. So NRF is North Star Realty Finance. Yeah, this got whacked yesterday.
Yeah, is this a railroad track?
Makes investments in real estate debt, real estate securities, and net lease properties. So, oh no, this is not the one. Hold it, NRF. No, this is all right. 1 second. There was another stock that was going down yesterday. Okay, so this is not a bad looking stock. North Star Realty Finance, right?
Right.
Yeah, so the low is 15, the high is 19. Oh, this is interesting. So this is saying it pays 8.83% dividend, right?
Right. I was just curious, the way it traded yesterday and the way it's trading today, is that Annapolis Railroad track?
It is.
And how do you use that information?
Okay, that one there, that wouldn't be a buy. What that is that...
Is that a sell?
Yeah, it's a sell at the 618 on the way up. I wouldn't sell it either because it's not a bad-looking stock. I mean, I don't think the stock's going to go into 1740. I wouldn't sell it.
Okay.
Where I'm going with that, Marie, if you bring that back to August 5th, that's where that strength is, and that's where it should stop it on the way down.
Okay.
Have a great one. Have a safe one. Stay right there, folks. We're coming right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's Gold Report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great spring, folks. This is a quote by Richard Bach. To bring anything into your life, imagine that it's already there. The bottom line, folks, is that our mind is powerful, no doubt. Who knows how it works, but, man, if you can think it and you can conceive it, it happens. Market-wise, let's take a look at it out here. We had the Dow down 6, NASDAQ off 3, S&P's flat. Gold contract down $2.50, traded at $1,198 an ounce. Now, what you had with gold is this. Gold got up into the $1,200 area again. Had the juice behind the move. Gold's going to be right back up there, folks. Why? Because the dollar's getting crushed. The dollar closed down 735 ticks, 97.79 rather, with juice, with volume behind that move. We had silver down 2 pennies at $16.25. Platinum down $1.50 at 1,160. Copper had a little move out here today, up 6.5 pennies, $2.77 a pound. Light sweet crude up 15 cents at $56.54 a barrel. Bonds, we had the 10-year up 5 ticks, 129.19. 30-year down 12 ticks at 163.23. Both of those, folks, want higher price. We're very close to those January highs. Bottom line is that it looks like the bond market is going to go after the highs. If we take the B point out, particularly in the 10 and the 30, before the highs, which is the B point up there, and it looks like it could take it out, that would be saying you get up and over the January highs. The 10-year right now is yielding at 1.8. So if you need a mortgage, folks, go get it, because that means that a 30-year FHA, VA, fixed, the whole ball, conventional, are all going to be running at about 3.85, maybe even 3.8, 3.75. Good numbers. King dollar down 735 ticks, trading at 97.97. King dollars for the third day. It was off the highs with volume. We have the euro up 85, trading at 107.70, and the yen is down 10 at 119.03. Our phone number is 877-927-6648. What's called, folks? Want to know what's going on in your world? And the world of the S&Ps, let's take a look at them. We'll start with the SPY. Bottom line, market's holding up here. There's no buyers, there's no sellers. The SPY today gets to a price point of 210.98. The 210.98 didn't make the high of yesterday, was 211. We did volume of 66 million. Yesterday, it did volume of 99 million. Well, you're going into 228 million. It's a number. It's a huge number, folks. That the characteristic, the volume characteristic, is from March 18th. The benchmark I'm using for, I'd like to see a close under, is the high of the downdraft of the 25th of March. That high in the SPY is 209.35. That's the second downdraft, by the way, too. The first one, you know, when we came down, we came down with some real juice on March 6th. March 6th, you came down with 188 million. You accelerated that on March 25th to 159 million. And you're testing the 188 and the 159 million on all of 66 million. The Qs, NDX 100. NDX 100 is the weakest indice out there. And what we're going to be seeing is a lot of numbers coming out. So this is going to be wild watching this shake out today. NDX 100 went to a price point today of 107.88. We had 16 million shares traded. That 16 million was going into 23 million, but it's also going into the downdraft. The downdraft out there had 41 million. So you can picture. You have 16 million you're going up into. You have coming down with 41 million. Bottom line, supply versus demand way too much supply line, folks. They're just giving it to anyone that is basically trying to buy those Qs out there. The small caps, what do we have with the small caps? Small caps had broke out yesterday. The IWM broke out. Bottom line is still above that breakout. We're at 126.48 and 126.32. Stay above that point, you can go higher. Gold contract. What do we have with gold? Nice setup here, folks. This is what we have with gold. So gold contract went to a price point today of $12.08. We did 151,000 contracts. That is pushing swing points, higher swing points with volume. You gave it up on price because we went from $12.08 down to $11.99. $11.99 is nothing. Why? Because the market itself, the gold market, couldn't take out its day of strength when this thing went down on Tuesday. Tuesday we got to 1183.50. Good setup. Why I say a good setup? Well, watch this. And this is what you absolutely, I love. Well, I actually don't like divergences. I like divergences when I can figure them out. So the divergence that we have is that the future market, when it went over the B point, so we have a small ABC up. Gold came off the bottom. As it came off the bottom, it came off the bottom of 1142. That was on March 17th. You went from 1142, ran 7 days up to 1220. Had the volume. You pulled back 3 days, then you went after the B point again. Well, the gold contract, folks, when it went after the B point, didn't have the volume, okay? It got close, but it didn't have it. It missed it, actually, by 6,000 contracts, okay? But a miss is a miss. But guess what? If you go over to the GLD did take the B point out and took it out with volume. The GLD is trading at 115.03. With the GLD, and the GLD trades 10% of the price of gold, the GLD, the B point on the GLD was 115.84. That B point was established on the 27th of March. We took that B point out on the 1st, and we accelerated even higher on the 6th rather. Both of those took it out with volume. So what does that say? Well, the A to B structure is $6.12. The C point on this is 113.41. That gives you a 119.54. 119.54 is going to put you right up where the gold contract and the GLD gap down on the 5th of February. So if we go back over to the gold contract again, what you have here, you set up that ABC structure. What you have, bottom line, the next move in gold is going to be up to this 1246 area. So it's going to be really neat watching this whole thing play out. Now, inside that context, what do you have? Well, you always want to basically know the bullish side, know the bearish side. We're in the probability business, so the reality is that you need as much information as you can as the market releases it. Well, we go over to King Dollar. King Dollar has released the most information on a consistent basis and has done that in a steady way. What King Dollar has done is this. King Dollar today had another expansion of volume. We did 70,000 contracts, and the suspicion was right off the bat when we did a 1 to 1.618. We actually did a 1 to 2 ABC structure on the way up when we hit a high March 13th. You came off that high with volume. When you come off highs with volume, folks, what I've found is that the corrections are always much larger. And when I say larger, a normal correction in any bull run is between a 50% and a 0.382 of the last run. So two different things end up happening. If you go on a straight line move, just a 3.382 pullback is a huge pullback, because if you go up 20 points, that is saying that you're going to get down 7.5 points. That's huge. You go up 20 points to get a 50% move, you go back 10 points, and that's a normal correction in a bull market. When you get volume off the top, guess what? You're going down further than that. So what do we have? King Dollar gets down to, first move gets down to 96. It comes back up, and this is what's so cool about the out of time in the trade, folks. You're looking at the market on both sides, not one side. Meaning, okay, we're going back up to the high. Does it have the juice to take out the high? No. What do we have? Volume dies in the vine. You do 46,000 contracts. That was on the 13th of April. That was trying to get into the high, April 13th. You did 46,000 contracts. You were going into 102,000 contracts. So you had half the amount of volume. Couldn't handle it. Then what ends up happening, and this is where it really released a huge amount of information. You come off that high with accelerated volume. We come off that high. On Tuesday, you did 65,000 contracts. Yesterday, you did 76,000 contracts. Today, we did 70,000 contracts. The lowest swing on this only has 28,000 contracts. This is Tom O'Brien. This is TFNN. You stay right there, folks. Coming right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the Future Economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished down 6, NASDAQ off 3, S&Ps were flat. And let's go over and first take a look at American Express. American Express just come out with numbers. AXP, American Express, let's see, they made their earnings numbers. They missed revenue, and missing revenue, folks, is a huge deal. Revenue, okay, so earnings, and this is where you'll see the market never believes this, when you basically are saying that you've made the earnings, but yet you don't make the top line. The estimate was $1.37, and they made $1.48. Bottom line, the let's see, first quarter, the revenue. Where's the revenue? Whoops, not that one. This one. Okay, so revenue. There it is, right there. Okay, so revenue. The estimate was $8.18 billion. They made $7.95 billion. So American Express right now closed at $80.41. 91 cents. It's trading at $80.05. Not that that's the end of the world. American Express, however, is down off its high of 95. It's trading at 80. Mattel, M-A-T. Let's go take a look at Mattel. Mattel closed at $27.27. That's trading at $27.15 right now. Mattel goes like this. They were estimated to lose 10 cents. They had an adjusted loss of 8 cents. Let's see, Mattel, the way Mattel is looking right now, M-A-T. Yeah, this is an equity that's off its high of 32. You're trading at 26. There's no action there either. AMD, we take a look at Advanced Micro Devices, AMD. Put this on a Advanced Micro, closed at $2.87. This is, of course, a semiconductor maker. This right now is trading out at $2.67. Numbers go like this. Okay, so the revenue estimate was $1.05 billion. They took in $1.03 billion. Their gross margin went down by 2. The estimate was 34%. They made 32%. Their loss, the estimated loss was 5 cents. They lost 9 cents. Okay, so you're trading down 20 cents, and that's also. Oh, I see what's going to happen there. We put this back. You put this on a daily for a second. You got to see how this is set up. This is set up. This has a high volume low on the 21st of January, which is going to go after. That high volume low, that's where it wants to go after. The high volume low is at $2.14. That's quite a way down from where we are right now. There's no doubt about that. Schlumberger, SLB. We take a look at Schlumberger. Schlumberger, of course, is one of the large oil companies, oil service companies. This closed at $91.89. That is trading at a price point of $93.70. So that's up $2 right now. Let's see what she looks like. Well, she's jumping over the creek. Let's see what she says. Okay, so Schlumberger, the estimate was $10.4 billion revenue. They took in $10.25. So less revenue, but compared to what I suspect folks thought was going to happen, that's why they're digging it. The earnings per share was 89 cents. They came in with 106. Now, let's go over to the gold market, because the gold market, folks, okay, when I'm looking at the gold market over here, what we have is that as I was going through the update, I was explaining that gold today did 251,000 contracts, which 151,000 contracts is an expansion of volume. And one of the tigers in the den said, hey, Tom, yeah, it did that, but guess what? All that volume, a majority of that volume was down volume. So let's bring this up, because he's absolutely right. And I want to show you this, okay? There's no doubt. When you take a look at gold intraday, what you have is this. Wow, that's a weird-looking chart. What did I just do there? Hold on. 10 minutes. Oh, I see why it was weird looking. I was already ahead of myself by a year. GCM5. There we go. Okay, so when you take a look at gold intraday, what you have is that gold reached a price point of 1208. We got to that price point. When we got up to that price point, bottom line, didn't have enough juice to go higher. It comes off that high, and there's no doubt your first sell down was at 10 a.m. this morning. That 10 a.m. sell this morning came down, and that came down with 12,000 contracts. Actually, 12, let's see. Yeah, 1,198 contracts. Very fast. Oh, one second. No, sorry. One second. Let me get this straight. Sorry. Just got to get into this a little, really get into it. Okay. 8,300 contracts, folks. Came down to 8,300. That got it to a price point of 1,198. Now, watch this. Watch how this goes. You made the low. The establishment of that low was on 6,000 contracts. If I bring this back, I'm going to show you something. There's a couple of different things that you're going to see here. You bring this back, what was happening is that that 6,000 contracts was coming into how gold came off the bottom at 0,900 yesterday, and we had come off that bottom with 11,000 contracts. So when we were coming down there, you had volume, no doubt. You come down, but guess what? You're going right into the buyer that took gold off the lows that were established yesterday. Okay, so to answer the question first, meaning, but yes, you did have volume on the way down, so why would you be, he's not saying this, I'm answering this question in my own head, okay, because I've answered this many times. In fact, I went through this when I was writing the first Time in the Trade book, folks, in 1998. I bisected and dissected, I actually bisected and dissected the Qs for over about 6 years. And what I found is this, is that if you had a higher high and volume come in, and you get a picture of something that's all I was doing then, and basically I still do a lot of it, but then was just dramatic, meaning day trading. Where the volume goes is where the stock, the currency, or the market goes. That's the first part. Second part gets even more intriguing, and what it is that when you have to put together that the volume characteristic, and then can it get to the swing point? Because the swing points are where the markets talk, walk, and squawk. Well, what you have is in the gold market is that when we basically came down on Tuesday we got to a price point of 1183.50. It couldn't even get to the sign of strength. The sign of strength that we have inside that gold market that was established on the first is dramatic. The low of the first was 1180. The high was 1208. The volume characteristic in that baby is a beauty. So bottom line, when you're pushing over a price point and you have higher highs, that's where it wants to go. Now you put that together with what? You're going to put that together, and that's why I love the gold market, because you can put that together with the dollar. The dollar, gold is acting correctly wanting to go up, the dollar is acting correctly wanting to go down. Correlation, gold is priced in dollars. You stay right there, we'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of the Federal Reserve, folks, this is where, one government institution against another is going to get really intriguing. And what it is this. In October of 2012, the Federal Reserve minutes were released a day early, and they were released by a firm that is a research firm that gets paid by funds, in order to basically glean information. Legally, that is, okay? Bottom line is that those minutes came out. They got released to certain firms, And, you know, it's 2 years later now. It's 3 years later. That's how long it takes Congress to get over it, I guess. Bottom line is that Congress right now wants to know who had access to those minutes because of that Fed leak. So what you're going to have here is this. You know, every single time that if we as citizens try to get anything from Congress or from any actually government institution, what always ends up happening? Well, most of the time what ends up happening is that they say that it's confidential information, right? Well, guess what? That's what the Fed is going to do to Congress. The bottom line is that the first response out of the Fed was hey, we've been cooperative, but, we have confidential information that we can't release everything. So this is going to be an ongoing deal, and it's going to be an ongoing fight. And it could get a little dicey because it's just enough information that the committee that's in charge of oversight, okay, absolutely has the right to basically get the names of who had the information before the fact, because there's no doubt that if you and I got your hands, legally this is, on the Fed minutes a day before the Fed minutes come out, let me tell you something. That's a retirement, folks. That is retirement, flat out. You go in the option market, you can just put on all the option positions, sit back, and collect it. So there's a smoking gun in there. The real question is, will they ever get it? I suspect they won't. And the reason I suspect they won't, because most times every and all information that is masked by the government never seems to come out. That's the bottom line. Let's go take a look at the oil market. We'll take a look at this oil contract out here. So oil today still goes up. That is after the Saudi government comes out with their numbers, and the numbers, folks, are dramatic. The numbers, you talk about pumping oil up, and they have to do it because socially Saudi Arabia will be toast, folks, if they don't pay everyone off inside their society. Bottom line, oil's trading at a price point of $57.96. The high is $57.19. Volume is dying on the vine, but what the Saudis did do is that they turned on the spigot in the world markets, and the spigot that they turned on is pretty incredible. They pushed out in 1 month half the amount of oil that comes out of the Bakken Shield. So they have plenty of oil, and they can push it out, and they're going to have to. This is what's really wild about this. I expect that they're not only going to have to push it out, they're going to keep pushing it out, because what do you do? Okay, so picture this. Put yourself in a situation that if you don't get everyone paid off, meaning, if you're running society, and of course they have a closed society, the reason that they've been able to stay in power, the kings over there, is that they just keep taking care of everyone. Well, if you don't take care of everyone, what's going to happen? You know what's going to happen. You're going to get overthrown, particularly in that part of the world. So bottom line, they have a choice. They have a choice to pump more oil, get more prices, and simultaneously trying to shut down the market, because you have both things going on. What very well could happen, though, is that the acceleration, it's going to be more important for the Saudis just to keep their own people calm by pumping oil versus putting everyone else out of business. I think the way this thing started had to do with probably putting Putin out of business, because if you remember when this whole oil thing started, the whole oil thing started when Putin started acting up on Ukraine. We probably made a deal with the Saudis. Guess what? You pump it up, we're going to bring oil down. Why? Because the Russians need that higher price. The Saudis don't need that higher price. I suspect that's what happened. Now, that's the beginning of the deal. And what happens, and this is where you got unintended consequences, because the unintended consequences are pretty intense in different industries. Inside the oil industry, it's about as intense as you get, because what does happen inside that industry is that when there's boom times, it's absolutely incredible, and when it's over, as it's over right now, the hurt is like dramatic. And those are all high-paying jobs, and so it's like anything else. There are people out there that are absolutely hurting, and it's a tough deal. I mean, you're going to have a lot of ghost towns, and I suspect there are probably already ghost towns out in the Northwest, because oil can be shut off in a second, and then the kicker inside this particular oil find in the United States is that the companies themselves continue to, they're drilling slow, but they're drilling. They're drilling, they're going to cap those wells, and as soon as oil goes up a little, guess what? They're going to start pumping it again. So I suspect what you're going to see is that each and every time that we, getting up to this 56 to, see, the thing that's amazing actually right now is that oil hasn't even done a dead cat bounce. A dead cat bounce. So oil went straight down from $94. Went straight down into this $42 area. A dead cat bounce, folks, would get you to $64.74. We've only done a 23% bounce. That's about as anemic as you can get, So we'll see if, in fact, oil's going to do an ABC structure on the way down. Because you got to remember what oil does have. Oil has that high volume low out there from 2008. And that high volume low hasn't been tested. It does have volume down at those levels, and that's about as intense as you get. We made at this time down to $42.03. The high volume low is $32.40. So let me bring this up. I'll put us on this chart for you so you can see what's going on here. This is pretty intense, okay? So in 2008, you got to remember we went from $147 flat. It took 6 months, and it never bounced on a monthly basis. You went from $142.27 down to $32.40. You stayed there for 3 months, and then you expanded up to $114. You pull back to $75, and then from that point on, you just kept having, well, you consolidated for, let's see, we consolidated from April of 2011 until September of 14. Then it basically got toasted again. If this is an ABC structure on the way down, man, it's going to be, in fact, here, I can do this way. Let me see something. USO. Let's see what this thing looks like. The USO, this has been trading long enough, though. Let's see. If I pull this back, this is pretty cool. Okay, so the USO, well, this is a trip. USO is already under the 08 lows. That was with 751 million. And it did 751 million. It's interesting. So the USO, let me look at this again. The USO, the fund's objective is to change percentage terms of net asset value reflect the change of the price of WT, of Cushing, Oklahoma. Yeah, so, I mean, this is, you know what this is saying? This is pretty intense. This is saying that we're going to be back down to those lows because when you take a look at this USO, and I bring this back 10 years, you broke those lows. Now, that has to do with the fees that we broke the lows. But you have volume down here, too, man. You get big volume. Let's say that now, what that is saying, that is only saying thus far, CL, that is saying that the last low that was established will get hit. That's how that's set up right now. That in itself, though, would be pretty intense. And I think that would be actually hard to do if the fact of the matter is, CL, if the dollar keeps going south. Because the dollar going south is going to basically put a little juice under that market. So our last low in the oil market is 45.93. 45.93 was established March 18th. It looks to me, though, what you do have here, particularly on a Friday, tomorrow may be the sell on this baby. It wouldn't be just yet. But the $60 level would be kind of the place where you could put stops on the other side of 60.31. It's not there yet, but it's getting close, no doubt. Our phone number is 877-927-6648. You go over and take a look at, copper. Let's go look at the copper market, because what you have had is this, okay, HGK5. You had a couple of these copper stocks, they start taking off. Copper's had a couple signs of strength. Yeah, you get action in copper. Copper's trading 277 and wants to go to 301. There's action here, man. This is a neat ABC. ABC up. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished down 6, NASDAQ off 3, S&Ps were flat. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. And don't forget, folks, every Tuesday, Thursday, our man, Mr. Andy Hecht, he's coming up right after me. He has the outstanding show. And, you know, if you're listening on the radio right now, don't forget, you can get all the programming at TFNN right on your cell phone. TFNN.mobi. That is the audio. You want Tiger TV, just go to TFNN.com, right on your phone. You'll see on the right-hand side a little box that says mobile devices. Hit that, you'll get the Tiger TV also. We take a look at the silver market, folks. What do we have with silver right here? Okay, so silver market right now, we're trading out at a price point of $16.25. Now, what silver has done is this. Silver rejected lower price on Tuesday. We got under the day of strength for March 20th. Okay, this is pretty cool. And it rejected the price and had lighter volume. And it was dramatically lighter volume, by the way. Okay, silver had 45,000 contracts on Tuesday versus its day of strength on the 20th of 60,000. Now, what do we do today? Silver does 40,000 contracts today. The difference of gold and silver right now is that silver has to get back inside a higher range. The higher range that we're talking about is $16.43. That's where you want to be. Basically, you get silver in that range, then you get action, I suspect, going up to that high. Both silver and gold, though, bottom line, want higher price. On a longer-term basis, silver actually looks better because of the way that silver broke its downtrend. And when I say better, that, you know, the top of that range is $18.39. Let's go over and take a look at the commercial real estate market. We use the IYR inside that market. Now, the commercial real estate market, folks, the IYR closed up 32 cents today. This market right here, and this is going to be interesting because this is all about interest rates. And what you have here is this. The high of the IYR is 83. And, you know, inside of this, folks, what you have the largest mall owners. You have big storage owners. This baby right here, the way this is trading, number one, it wants to come down and more than likely test the 72 area. And right now, you're at 77.90. You know, if you get back inside the oh, this is teetering too here. Let's watch something. Yeah, we got to watch this for a second because this is pretty cool. Let me put this on a weekly for a second. I just realized something here. This is going to be this is almost in trouble, and this is what it is. When this broke out of its 2013 highs, the price is $76.21. That $76.21 had really nice juice. We did the 68 million shares there. When we broke higher, folks, you broke higher with 26 million. That was when we broke higher in November of 2014. 26 million versus 68 doesn't fly. That's the first part. But that's not the only part. The bigger part of that is that after you made the high out there at 84, you did 42 million. Then you came off the highs, and right now, you did 64 million on the way down. So it says you're going to go after the 76 area again. If, in fact, you get inside the 76.21, that puts game, you know, right down into this $70 area. And the heads up on this one, of course, has to do with how commercial real estate puts together their deals. You know, there's not free money and money at very inexpensive interest rates, folks, is totally where it's at for builders. There's no two ways about that. Large commercial real estate folks, what they normally do is that they put a deal together and they're selling the cap rate. And selling the cap rate has worked in a huge way because bonds have been in a bull market since 1980, and it's 2015. When that turns, that's going to be very tough for the first year, year and a half, because what will happen many times is that the selling of that cap rate, it will go against the commercial real estate folks. So it's a big problem. You know, one of the larger problems out here that is going to basically come home to roost is the amount of high-yield bonds that are inside ETF structures. I brought this up a few days ago, but if you have a high-yield bond fund, folks, you better understand how those high-yield bond funds work, particularly whether it's in an individual fund, inside a mutual fund series, or in the ETF structure. Because when folks want to get out of that fund, the intrinsic value of the fund won't matter at all. And that's really important to understand. If you and I have a bond and we hold the bond and you have it at home, you have it in a safety deposit box, that's great. That's awesome, okay? Because guess what? You're going to get paid the yields, you're going to get paid the principal, all the above. When you have them inside another security, it's not going to matter. The reason it's not going to matter is this. When everyone wants to get out the door, a high-yield bond period takes about a week to 2 weeks to do a transaction. Now, what has happened is that the liquidity inside the ETF structures make it like you and I can buy them in a split second, and we can. But we only can because of the amount of money that is going into the high-yield funds. As soon as you want to take the money back out, guess what? You won't, there's not going to be enough money to give the shareholders of the security. Bottom line, check out that fact, folks. If you own one of those, you absolutely want to Google this fact and really get to understand how it works. Because in this day and age, I know that it seems hard to believe that you can do a bond, a security. Let's say the picture that you're all bond dealers now. It would be hard to believe that it would take you 2.5 weeks, 2 weeks in order to do a bond deal. But that's what it takes. That's what it takes. They're still in a paper society inside that market. So when the selling starts, which it will, and the selling will start, folks, when the Fed basically ends up raising rates, which at some point they will. You know, the way the market's trading right now, the Fed continues to say they want to raise rates. The bond market, meaning the Treasury market, is saying you can want as much as you want, but it doesn't mean a thing because the Treasuries continue to go down, the world rates continue to go down. So I suspect that we're not even thinking about raising rates in June. You stay right there, folks. I'm Mr. Andy Hex. Coming up next, he's going to be growling on a problem with you. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and then fly with it. Thanks for being there, folks. Have a great one, safe one. You stay right there. Andy Hex coming right up. Go get him, folks.